Hey guys, welcome back to the Best Year Yet Challenge for 2018. This week we are digging into probably the most crucial topic for your business, and that is how to create financial freedom. Because I think you and I both know that having $1 million in sales at the end of the year, but no money to show for it and not being able to pay yourself at the end of the day is not the goal you set out for when you started this business. So we want to make sure this week that we're giving you all the information you need in order to make the numbers in your business speak to you. So you can use those numbers to make decisions that are going to make your business more profitable at the end of the day, and have you digging into the numbers that are actually important versus just the vanity metrics that are so easy to get lost in business. All right, here's the plan for the week. We're going to dive into first the tools that you need to set you up for success in your business. Then we're going to talk about what daily reports and practices you can use to keep on top of the numbers as you move forward in your business. Then we're going to go into equations that matter. We'll talk about markups and margins and gross margin ROI and how to make sure those numbers speak to where your money's going in your business. And then finally, we're going to get specific about how to pay yourself and how to speak to your spouse or your partner about paying yourself and keeping the morale up in your business and in your home life when it comes to money. You know, as we dive into this week, a couple of key points I want you to think of. This week, it's not just going to be me on the video, but I'm actually inviting Sarah. She'll jump in a few slides into this video because financials and understanding how to build a profitable business are definitely in Sarah's wheelhouse. If you haven't met Sarah Burks yet, she joined our team in November after 20 plus years in retail. She's had a successful business, and not only was it profitable, but I want to tell you something that I think is really important and really smart that Sarah did in her business, and I want you guys to be thinking about this too. From an early stage in her business, Sarah and her business partner made a roadmap to success. And they had a plan of where they wanted to grow the business to, how profitable they wanted that business to be, and then they made a plan for their exit strategy. They both were moms, and they knew that when their kids got to be a certain age, they wanted to be able to walk away from the business so that they could go back to traveling to sporting events and doing all these things at home that were important to them. And it's something that the two of them did a great job executing together, and they did it in a very profitable fashion. So I want you to keep that in mind with your business. What is the end goal, and what's the roadmap you're going to use to get there? And what does success really mean to you? Again, I alluded to a couple vanity metrics that I think so many boutique owners get lost in, and those could be follower counts on social media, wonk wonk, because follower counts don't pay the bills, do they? And that also goes to gross sales. Again, I alluded to this in the first slide, and that is you could have $1 million in sales or you could have $10 million in sales. But at the end of the year, if you haven't paid yourself or you haven't grown your team and paid your team, how profitable and successful is your business? I want you to get down to what that number is to you and what's important to you, because as we talked about at the Boutique Summit, bigger isn't always better. Sometimes smaller is the way to go when you can become even more profitable. Another tip I want you to think about this week and keep in mind is the difference between tracking numbers and analyzing numbers, which is a big topic and a big mistake that I feel like a lot of boutique owners fall into. There's a difference in just tracking numbers in an Excel spreadsheet or in QuickBooks and actually sitting down each week and analyzing those numbers and helping them show you the way that your business can become more profitable. Sometimes changing a number by a percentage point or 5 percentage points makes all the difference at the end of the day. So I want you to really consider, what does it mean to analyze the numbers in your business, and how are you going to hold yourself accountable each week to do that? Now, last piece before we jump into this training, I want you to know that for some boutique owners, I realize this can be overwhelming. And coming from me, I was a communications major. I hated math going to school. I hated it. I still don't like my high school math teacher to this day for this reason. So if this is you and you feel a little bit frustrated as you think about math, I just want you to know that you're not alone. And for me, the turning point coming from a communications major into someone who now really enjoys math, the turning point was when I understood that numbers could tell a story, because telling a story is what I was interested in. So as you think about this, I want you to look at the numbers not in an overwhelming fashion, but in a way that allows them to speak to you, to tell you how to build your business, and gives you the next steps in the roadmap to do so. And last piece, this is just the beginning. There's so much to know on this topic of financial planning, inventory management, open to buy, all of these numbers and formulas we're going to give you. This is just the beginning. So look for more from us this year in the Boutique Hub as we develop additional training courses on this topic and add more resources to the training library on this topic, like the bonuses that we're going to tell you about at the end of this video. All right, should we dive in? Let's get started this week. All right, let's kick it off with what tools matter to your business. And I want to start with banking, and even more specifically, I want to start with what business entity you are set up as. Are you set up as a sole proprietor, where all of your business income simply flows through to your personal tax statement? Or are you set up as an LLC with a little bit more protection? Or are you an S Corp or maybe even a C Corp? An LLC or an S Corp are the most common types of business entities for retailers, and a couple of different reasons why. A little more personal protection for you if you were ever to be sued, we'll say, and a little bit different taxation in the way that you pay yourself. As an LLC, this is a flow-through entity where any income you generate goes onto your personal income tax statement. Whereas an S Corp, you are set up so that you're on payroll, and you as the owner are getting a check with your employees on payroll. So again, the question is, I want you to make sure you're visiting with your accountant and your attorney, people who understand your personal business and personal income scenario so that you can make the best decision for you. And then once you've had those conversations, at that point, I want to make sure that your banking is set up properly. A couple of key points, and some of these may seem basic, but you'd be surprised at how often these aren't set up correctly. So in terms of banking, I want to make sure you have both a business checking account set up and a business savings account set up. And whatever bills you're paying for your family and you're using as tax write-offs into your business, I want you to make sure that those are clearly defined. That if you're paying the cell phone bill or the internet bill, if you work from home, that those are actually being paid out of your business checking account. And they're actually coming from your business credit card or your business, if you're actually writing a check from your checking account. Making sure that there's a very clear definition between what is business and what is personal, because it's only going to make your life easier at the end of the year when you file your taxes. And in terms of your business savings account, I want to mention this. As you're setting aside money for your sales tax and setting aside money for your income tax, which so many people forget about at the end of the quarter and the end of the year, you don't want that money intermingled in a place where you could accidentally overspend on inventory using those funds. That's why that savings account is so crucial. Out of sight, out of mind, and you cannot dip in and touch that money, right? It's there for you when you need it. That savings account also needs to be the place for that nest egg. A lot of times we hear when times get tough in the J months, in January and June and July, when business is slow, boutique owners can often be teetering on the edge of being open or closed and shutting down the business altogether. But what makes the difference is how well they plan for those slow times when the times are good. So make sure when things are looking good, it's the holiday season and you're turning a profit, that a percentage of those sales is going into that savings account for a rainy day, right? You'll make your mama so happy when you do that. All right, next tool that I want to mention that's important in your financial analysis, and that is your e-commerce provider. Maybe you're already set up on an e-commerce provider like Shopify that you love or BigCommerce, but if you're not and you're considering making a switch, I want to make sure that you're looking for something that is going to give you data to empower you to make better financial decisions. So, for example, we talk a lot about Shopify in the Boutique Hub because we're really familiar with the apps like Delirious Profit and Data Export and the daily reporting apps that give you the information you need in terms of sales, cost of goods sold, customer information, so that you can make those numbers speak to you. So, choose the right e-commerce provider. Merchant services. Merchant services are Stripe, PayPal, Shopify payments, Square, or it may be something you've already set up through your bank or Vend, or there's a number of other merchant service providers out there. It's where the credit card processing takes place. The reason I mention this here is a lot of times we overlook merchant services and just choose what's quick and easy, like Stripe or Shopify payments, and then we don't give it a second thought. But as we move more into financial analysis and giving you formulas to track your expenses in your business, every dollar counts. So if you can save $1,000 or $2,000 at the end of the year in merchant service fees, say going from 2.5% to 2.7 or 2.8% in those fees, that is a big deal at the end of the year, and it impacts how you can grow and scale your business or how you can pay yourself. So dig into who your merchant services provider is and understand what those fees are for you. Accounting software is a crucial tool that you have to have set up in your business. Now, there's a number of options out there, and I know some have been mentioned in the hub, so feel free to go search them there. But QuickBooks is definitely our go-to, and we like it because it easily integrates with PayPal, with Shopify, and with WooCommerce, which is another thing that we use at the hub. So Shopify, you can easily set up those income streams to automatically be reported in to QuickBooks. You can also automatically set up some expenses in QuickBooks, some recurring payments like the hub or your domain name that renews annually. Anything that's a renewing payment, you can automatically set that up in QuickBooks so it's tracking it in the right category under your expenses, and you don't have to manually input that month after month. So QuickBooks is crucial for tracking all of those numbers, but also holding yourself accountable to have time to analyze those numbers is what's even more important. And knowing what reports you're going to need to run in QuickBooks week after week or month after month, huge step. And that's what we're going to talk about in the next slide when Sarah joins us on this video. All right, let's dive into point of sale system. I know there's a gazillion, is that a number? A gazillion questions on point of sale systems in the Boutique Hub at any given time. So I want to start with just a couple of key points you should look for when finding a point of sale system. Here's a little idea as to what they actually do and how they benefit you in your business. You can use your point of sale system to input purchase orders. So you understand what is out for purchase, how long it's out, what is the ship date estimated to be, and what is your hard cancel date that you may have given your vendor. You can also track what's out for purchase by class or by vendor so that you know what's coming in as you plan your open to buy and your purchase information for the month ahead. It also gives you your vendor information all in one place. So there's no more spreadsheets and post-it notes and all the other sheets of paper that easily get lost in our offices, right? Point of sale systems also help us track inventory, and this is probably the most important piece. Track our inventory on hand, and again, that could be online in our store, in our warehouse, by class, by brand, by style, and by its date and aging. It gives us all the inventory analysis that we need so that we can make better decisions about markdowns and better decisions about what to buy in the month ahead. Point of sale systems also help us track customer data, understanding our best customers, their last purchases. We can make notes about customers so that when those customers come in, we can help them find the things they may be more likely to buy, right, or need. Helps us track customer contact information, which can often integrate right into our marketing channels. MailChimp or some point of sale systems have marketing channels built right into them, integrated already. And then gift cards and reward systems come with some point of sale systems. You can also track sales and sales data by dates, by times, by vendors, by classes, by customers. It helps you understand daily sales goals and average order values and the lifetime value of a customer. All the equations and data that you need as you're making times about the hours of operation in your business and what events to run. And if events were successful, all the data is there to help tell the story. A few options that I want you to be aware of when it comes to point of sale systems. There's a number of members of the Boutique Hub now that are point of sale companies, and that's been a big key for Sarah, is having those conversations with point of sale companies, trying to get better member pricing for Boutique Hub members, but also understanding the difference between these companies so that we can help recommend to you what systems may work best for your business. A few that you should check out. The first is Streamline Retail, who is a member of the Hub. They're a company that will actually interview you and then help match make you to the best point of sale system. So something like Lightspeed, Accumula, which helps connect Lightspeed to Shopify, also Shopify point of sale, Square, Springboard Retail. Rain POS is a member of the Boutique Hub, Big Hairy Dog Information Systems, Retail Edge, Retail Pro, and several more. So make sure before you do anything else with a point of sale question, you go check out the service provider directory on the Boutique Hub so you can find what's right for you. All right, finally, the last piece of what tools matter for your business, and that is the business support team that you need around you, which would include your attorney, we mentioned them, but most importantly, your accountant, who will help you understand what business structure you're set up as and help you make better end of year tax and accounting decisions for your business and personal situation, but then also an inventory planner. And now sometimes accountants will tell you that they can help with this and they're an inventory planner, but I would be wary of that. I would make sure that you are working with someone who is a trained inventory planner that can help you understand open to buy and work with you month to month to understand what is turning in your business, what are your turn rates by class and by brand, help you maintain better margins, and then help you plan out the month ahead so you know by looking at this plan, what is your sales goal in the month ahead? What is the inventory you currently have on hand? How old is the inventory you currently have on hand? So does it need to be marked down? And then how much fresh inventory do you need to bring in by sales, class, and category, which could be tops, bottoms, dresses, various types of tops, as well as by brand or vendor. So these are all the crucial tools important to helping you establish financial freedom for your business and for your personal life. So, all right, from here, I'm going to let Sarah take it over and she can dive into the reporting that you need to know as a boutique owner on a week-to-week and month-to-month basis, as well as some financial equations that are going to be crucial to your business and to your success. Have a good week.
What daily and weekly reports and financial questions should retailers and independent wholesaler brands be asking? Hey everybody, it's Sarah from the Boutique Hub, and let's be honest, our days are full of millions of things on our to-do list. However, if we're being honest, there's probably a few of those things that are on those lists that are really not even worth our time. So when we say we don't have time to analyze our numbers, what it really means is, one, we really just don't want to because it's not fun. Two, we don't really understand the importance of it. Or three, we're not really that confident and we don't even know where to start. So hopefully by the end of this training, you will have the want to and the confidence to look at these numbers daily, weekly, monthly, and of course annually, and wonder how in the world did you manage your business before? Because if you're analyzing these numbers and following these steps that we're going to go over in this presentation, you will be making money and it will be fun. And after the end of it all, that's our goal. So your store is driven by two forces, sales and turnover. Many of us like to concentrate on sales since we feel like we're in control over that. We are in control of what we sell, how we promote it, where we display it, and who we staff to sell it. But without looking at the following key data, we aren't setting our business up for success if we don't even have our sales goals. First of all, let's set some daily, weekly, monthly goals. How do we do that? First, we have to figure out what we'd probably like to sell in a year. So then from there, you can divide that number by 12. That gives you your monthly goal. You're going to weight these a little bit different. December and November are going to be a little bigger, obviously, end of fourth quarter. And your J months, your January, June, July, typically are going to be a little slower. So set those goals for each month. Divide those numbers by the number of days per month, and that is going to give you an idea of what your store should be bringing in each day. If you reach these goals, inevitably, you should reach your end annual goal. You also want to take into account weather conditions, events, whether it's social, local, or current events. Example, is it an election year? When did Easter fall? Was it early or was it late? These are all things that you'll want to make note of to be able to compare and have a good relationship between if you reached your sales goals versus what you did last year. Why do we need to look at this? You're probably thinking, I hope this gets more detailed than this, but we have got to stay vigilant on these basic goals. We want to know this to know when we need to staff light or heavy, when we need to be open, if we need to be open late or earlier, or what we need to be buying. Something else I challenge you to do every single day. When you balance your books, run a quick report. Look at how much you sold versus how much it cost. Was your day profitable? Always do this, especially after a large promotion or an event. Something else I challenge you to do is run an aging report. If you're not even sure how to run these reports, it's probably because you don't have a point of sale system, a POS system, or some retail managing system. This would be a great time to look into that. So, aging reports. You could probably tell me that you have a pretty good idea of how old the inventory in your store is. But as life gets crazy, we lose track of time. So, knowing exactly how old your inventory is helps you to decide if it's time to restyle or reshoot your inventory, both in-store or online, when it's time to remerchandise your store layout, but most importantly, if it's time to take markdowns. Knowing the age of your inventory helps you know where you are and what is making money and what is not making money for you. Your inventory should always be working for you. It is your greatest asset. However, most often, it's our least productive asset. So, you very well may have an amazing relationship with a certain vendor. But if that vendor's items are growing and taking root in your store, they're not working for you. Same with classifications and categories. I challenge you to define what those are in your store and analyze them, at least weekly. Know if that inventory is working for you and making your money. If it is not, mark it down, move it out, get it out of there. And your first markdown should be your cheapest markdown, and you should take it earlier rather than later. But I'll tell you, if you take that markdown and it's still sitting there, that's telling you your markdown was not steep enough. You can learn a lot from your markdowns. Your customers will tell you. They will tell you by buying or not buying your inventory. Speaking of inventory, it is very important to know what you have on hand and what you already have on order. A lot of times we forget about what we have on order because buying is so fun and it's exciting, but if it's not then in your store, you don't have that relationship with it yet. You have not gotten it in there to sell to other people. So a lot of times we forget about it. So this buying thing, it seems like the reason why so many boutique owners get in this business anyway. They love to buy. They love to have new inventory. However, you need to have that new inventory when the timing is right. You need to have it at those crucial times to be able to support your sales. It is important to analyze what you currently have and what you currently have on order by class and category and by vendor to make sure you're on target to reach those sales goals we talked about earlier. There's no way you can reach those sales goals if you don't have the appropriate amount of inventory. Having the right numbers of inventory on hand does not just happen by chance. It is planned for. In order to reach these sales goals, you have to have appropriate inventory levels at the start of the month to be able to support those sales goals. Right now you're sitting there, how do I do this? It's called open to buy planning. That is the answer. There are specialists that work in open to buy planning, and a number of them specifically like to work with the hub. So you will find a number of those in our service provider directory on the dashboard. So if you are simply buying items because you think they are cute and you think you'll sell them and you think they'll move and you think maybe you get them in earlier this year than you did last year, and if you do, they'll probably sell and blah, 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 blah. But if you are not looking at your current stock, what your sales goals are, what your history is, what the age of your current inventory is, if you are not investing wisely in your business. Let's face it. If you are struggling with cash flow, it's because you're struggling with your inventory. Know your inventory and you will know where your cash is at. Bottom line, everybody, if we do not analyze our dollars and where our dollars are at in our store, eventually we will have no dollars left to look at all. So let's look at what everybody wants to know. Where does my money go? So here's a quick where does my money go formula, or how much profit should I be making? This depends on a lot of different factors, but here's a general rule of thumb. But first, let me just tell you, I am not a financial guru. This is just a good starting point. So we all have our gifts. Analyzing numbers might not be our passion. However, if we want to make money in any business, you have got to have a roadmap to help you find the bank at the end of the day, week, month, or year. And here is a really good guideline. As a general rule of thumb, you take your sales at 100%. Say the cost of those sales is going to be 52%, leaving you with 48% of your gross margin. Out of that original 10% sales, you're going to have 10% of that, out of that original 100% of your sales, you'll have 10% in rent expense, 14% in payroll expense, leaving you 14% in other expenses with 10% left for you. Again, this is not etched in stone. It is simply how I work the numbers in my store, and it is a suggestion. You can adjust it accordingly. However, achieving a 10% profit is hard to do. So achieving a 20% profit is achievable, but it is going to take some very strict dedication to you keeping your other expenses low. You cannot allow your payroll and your rent to exceed these percentages. To increase your net profit, you will have to increase your markup, therefore reducing your cost of goods sold. In other words, the whole key here, buy low, sell high. Here's a quick example of what that would mean to you if you do $100,000 of total revenue. 48% of that is going to go to inventory, which is $48,000. 10% of that to rent, $10,000. 14% of that payroll, 14% your other operating expenses, marketing, your credit card processing fees, your interest expense, all these things that go, your staplers, your tagging guns, your bags, all these little things that add up, market expenses, travel expenses, whatever it is, that's going to come right in there in that 14% operating expenses. That leaves you $10,000 for yourself, for your personal savings. Now remember, that is subject to personal income tax, up to 30%. So keep that in mind. Your goal is to increase your profit margin, manage your expense categories, and maximize your self-pay. Okay? We can agree that sometimes your rent expense will plateau. That very well may not go up that often. But as you sell more, you'll have to have more product to sell. Maybe your payroll is going to go up. Many things go into this. These numbers are able to be adjusted, but at the end, really keep an eye on that operating expense. That's where so much of your money can just disappear. Here we'll look at an example of a business that generates $500,000 worth of revenue. The same situation, leaving you a 10% savings for yourself of $50,000. I ask you to please be careful before you cut your payroll to increase your bottom line, because I imagine that many of you run off of customer service, and that is key to your business. If you cut your payroll, you cut your productivity, and you, at the end, cut your customer service. So your goals here are to keep inventory tight, to turn faster, get cash out of your slower moving merchandise, manage expenses by category to impact your bottom line. Yes, over time, your revenue will increase. Things like rent may plateau, but the number of employees you have may also increase. Or as revenue goes up, odds are so will your marketing budget, as they're directly related. This is also where your pricing strategy and profit margins become crucial. Note, now we will take a look at markup. Markup, circle it, asterisk, draw arrows to it. This is huge. Once you've mastered this, you will know where your cash is going. Then it's time to build wealth and investment versus simply being profitable. This is why having a roadmap to your end goal is crucial. Sometimes the best lessons we learn is through failure. And guys, it's okay to struggle here. It really is. When we struggle and we fail, we learn. So if this isn't happening for you, if you are not taking home 10%, I challenge you to allow someone who is unbiased, unconnected, and unrelated to you to look at your books. And if it does have to be somebody who is related to you, put your big girl pants on and be professional about the reality of the words they're about to have come out of their mouth. Because somebody with an unbiased opinion has got to take a look at your books if you refuse to look at the obvious or believe the obvious. If you're hiding behind a false facade, people will see through that eventually, or you'll kill yourself trying to put up some false wall of an amazing, just a huge lucrative business. Be honest with yourself. We all were given gifts, and God has made us all unique. Some of us are number crunchers and math geniuses. Others of us are not. So if you need help in this situation, or you need help with your numbers or analyzing things, do not hesitate to ask. Here are a couple other key formulas that I think are really important to look at. And besides these listed here, please make sure you check out the Retail Math Basics. For these are in the training library, these formulas along with many others. So something that I think it's fun to look at is what is my average sale per hour. I like to do this with my staff also to see what my staff is selling per hour each individually. So you take your sales volume divided by your hours of operation. Why do you need to know this? Again, for staffing efficiency, for days of the week that you're open, things like that, very important. This next one that's a little scary, this is your current ratio, a measure of your liquidity. You need to take your current assets divided by your current liabilities gives you your current ratio. Ideally, you want this to be a 2-to-1 ratio. The higher, the better. The current ratio is mainly used to give an idea of a company's ability to pay back its debts with its assets, such as your cash, inventory, accounts receivable. In short, this is a rough estimate of how healthy your company is. You might want to do that one on your own time. The last thing here on this page is my big aha. I love this one. The turn ratio, the turn rate. This is huge. If you take absolutely nothing else away from this training, please pay attention to this. Turn rate equals efficiency. This is the big takeaway of this training. What does this mean? Let's start here with this question. Do you like to buy new merchandise? Do you like to always have new arrivals? Do you like to go to markets, shows, and spend hours online buying fun new products for your store that your friends and customers are going to just go crazy over? If you answered yes to any of these, and let's be honest, you probably answered yes to all of them, then you need to understand inventory turn rate. So let's find out, how do you figure out exactly what inventory turn rate is? So you take your cost of goods sold divided by the average inventory for a period of time. Okay, your cost of goods sold, you're going to find that on your income statement. Your average inventory, you're going to find these numbers on your balance sheet. What you will do is you'll take your last period's inventory plus the current period inventory and divide them by 2. Simple enough. So, for example, say you do that math and you come up with a 3-time turn rate. Keep in mind, the higher the better. If you have a 3-turn ratio, you're receiving inventory that you received in March. You will not actually receive the cash value back on that inventory until 4 months later. Where did I get that from? There's 12 months in a year. Divide that by 3 turn, you get 4 months. So it takes you 4 months to turn that inventory. So you receive that inventory in March into your store, you've received the cash on that inventory, the sales, in July. Now, let's look at an inventory turn of 2. This means it's going to take 6 months. So you receive that same inventory in March, but you will not actually get paid back on the inventory until 6 months later. Therefore, that's September, folks. That is tying up a lot of cash sitting there, aging. Those sweaters are dragging, almost hitting the floor now. Yikes. Huge difference, since you probably paid for these goods within 30 days of receiving those, right? So who wants more cash? Who wants cash quicker? We all do. Time is money. The same can be said that time is marginal. So how long your inventory sits on your sales floor costs you time, which costs you money. If inventory turn is too high, though, that means you very well may have out-of-stock issues, and you can't sell what you don't have. If inventory is too low, again, cash flow problems. It not only affects your cash flow, it drains your morale. You do not want to look at the same items in September that you received in March. Neither do your customers. Think about your customers that come in every couple weeks. You know you have them. They want to see fresh new goods. They want to buy fresh new goods. If they see the same old stale inventory, you will notice your sales going down, your cash tightening up, and the end result will be 100% frustration all the way around. You're upset because you can't pay your bills. Your staff is frustrated because you are upset and you're bringing bad energy to the store, and they're bored and sick and tired of trying to make that floral tank top work as a new fall arrival. Your customers are not stupid. They know that that inventory is old, and they eventually will start losing confidence in you. Everyone loses. Therefore, you need to understand how long it will take you to turn your inventory back into cash. We always want our inventory working for us. Having a higher turn ratio equals product freshness and a better cash flow. Your inventory is working for you, not against you. I have said that 10 times and I'll say it again. Make your inventory work for you, not against you. Again, your inventory is your largest asset you have. Make it productive. Here's an example to really understand what this means as far as your cash flow. Say you have a business that does $1 million annually. That same business has a 2-turn ratio, which means it takes them 26 weeks to turn their product. If they increase that by 1 week, if they increase their turn rate to a 2.1, which is basically 25 weeks of turn, that will free up 1% of their annual sales for their cash flow. 1% of $1 million is $10,000 additional cash flow for them. I don't know about you, but $10,000 is a lot to work with in a business. So here's the question. How do I do that? Plan inventory and sales based on monthly sales and your supply, what you have and what you have on order. Recognize mistakes and recognize them early. Take your markdowns, take them early and make them work for you. And lastly, be in stock. You cannot sell what you do not have. If all of this sounds extremely overwhelming, which it probably does, again, I will say a point of sale system is key and an open to buy planner is crucial. Let's talk markups versus margins. Do you tell people that you have the best prices? If so, you are training your customers to buy your product because of price and price alone. And believe me, they are smart. If you are already the lowest price in town, a true retailer knows that you are not taking a livable markup. So what happens when you have to take a markdown? Because to be truthful, the time will come when you have got to take a markdown in your store. Unless you want to be a discount store and think you can buy at discount store prices and you can turn product at a discount store turn ratio, then you have got to have a realistic markup. Do not act like a discount store unless you want to be a discount store. Marking up is retail. That's practically the definition of it. You must mark items up to be able to pay your rent, to be able to pay your payroll, and to be able to pay yourself. Each markup you make should be able to absorb 3 things: markdowns, operating expenses, rent, bags, utilities, payroll expenses, everything. And 3, it should be able to absorb your desired profit. How do you do this? Avoid a cost-based pricing strategy. I will repeat that. Avoid a straight cost-based markup strategy. Do not say, how much is that top? It's $10. I think I can sell it for $25. Do not say that. Look at that top and say, I think I could sell that for $30. I think I could sell that for $25. Okay, how much is it? Okay, now you know. Now you have said it based on what you can sell it for, because that's what you do. You sell things. That's the best. That's what you're the best at, right? Is selling things. So look at an item and think, I could sell that for this much money. And then if it's affordable to purchase, go ahead and purchase it. This is basing the product then off a retail based on what you paid for it, not on what they're asking for it originally. The key here, each item should be priced accordingly, not on an equation. So if you are not making money, look at your initial markup compared to your MMU or your maintain markup. Your initial markup, your IMU, compare that to your MMU or your retail after markdown. That is your maintained markdown. Okay, or maintained markup. what you get for a product after a markdown. Margins. This is simply knowing what you get back on every dollar you spend. A margin is a percent you keep after paying for the cost of what you sold. The greater the margin, the more money you get to keep for every sale. What should you be aiming for? 60% margins. That's a good idea. So here, check out this quick little link right here, Omni Calculator. This is a great way to check and calculate your margins and get a better idea of where your markup should be. Real profitability comes when your margins combine with effective turn rate. The faster you turn an item, even with a little lower margin, the more profitable you may be compared to a higher margin with a slow turn rate. The secret? Find the sweet spot, which is where inventory planners and consultants come in. And later, in more in-depth training, I have a whole formula and basically a cheat sheet that kind of walks you right through that. You would be surprised if some of the things that you have in your store are really working for you or working against you. So now we've got to the fun part. I want to pay myself. How do I do it? Paying yourself first starts with the initiation to do so. You intend to pay the rent every month. You intend to keep the lights on and the heat in your store. You intend to pay these bills. So just as you plan for that, plan to pay yourself. Holding yourself accountable to weekly financial reviewing and budgeting will allow you to cut your paycheck first every month on time. After all, that's what we're in business for, right? What would your business be without you? Perhaps your mindset is that you would be willing to reinvest this all back into your business, but morale eventually takes a toll. How easy is it to get burnt out when you pay everyone else before you pay yourself? If you don't feel it at the end of every month, I guarantee you will feel it at the end of the year. So first, identify what personal bills could be wrapped into a business expense and taking care of those with your revenue. Keep track and have conversations with your spouse about all of these things. Next, determine a dollar amount, even if it's a minimal $100 a month that goes into a separate checking or savings account just for you. This is a little reward for you because, girl, you have earned it. This is something for you to splurge on, use on your home, your kids, or something much greater. This business is a part of your family. It eats up more time, it eats more resources than any child will ever eat. Therefore, all lines of communication must be open with your spouse to have a successful business. However, at the end of the day, you cannot do any of these things if you have not planned for them. Planning is a non-negotiable standard. You have got to do it. You have got to plan for these things. Make it a commitment to pay yourself first. How do you do that? How do you actually take money out of your business? That's where your accountant comes in. This depends on what type of business structure you have. Perhaps you would take this off of a draw of your equity. Perhaps you take this off a percent of your profits. This is up to your accountant. Everybody's business is designed differently. But be wise about it. Do not rob Peter to pay Paul. Be consistent. You cannot budget inconsistency. Okay? You cannot automatically one month take this much and the next month just take random numbers. You have got to have a system and stay consistent with it. If you start paying yourself too much, there eventually will not be enough money for rent, utilities, or inventory. And as we said before, if you do not have it, you can't sell it. If you don't sell it, you don't make money. If you don't make money, you cannot pay your bills. At the end of the day, you will certainly not be paying yourself. So, do not rob Peter to pay Paul. I want you to know you're worth it. You are worth that paycheck. So put the time in, do the math, figure out how it can be possible. And when you take that first paycheck to the bank, I want that from a distance imaginary high five with a big smile on your face, knowing that you've accomplished your goals. You have the confidence and the know-how to look at these numbers and tackle your business like a true boutique boss would do. So, girls, let's act like a lady, make money like a boss, and let the numbers tell a story. We have to have a plan. This kind of stuff does not just happen. These boutiques that you might be envious of and think they've got the world by the tail, they did not just stumble upon greatness. They put these things into play and made the numbers work for them. So here's your homework, guys. The week 2 worksheet, this accountability thread. Remember, for all of those who participate weekly, you're up for huge giveaways at the end of the 6 weeks. So comment on this video below. Also, go to the training library and check out the retail math cheat sheet, as well as what is a point of sale system. There's a cheat sheet in there for that as well. Guys, that dashboard and that training library is full of resources for you to take a look at and to better your business. Lord, I thank you so much for the opportunity to work with these girls and be here for the Boutique Hub. This has been a wonderful experience for me thus far, and I look forward to meeting you all in the future. God bless.